I'd like to introduce Mr. Is it Kerr?
Kerr.
Kerr, I apologize, who's Senior Director of Government Relations of the National Association of Enrolled Agents. He represents the interests of enrolled agents who are tax practitioners licensed by the IRS and serves as their liaison to the IRS. The National Association of Enrolled Agents is the professional society that represents 40,000 enrolled agents nationwide. Thank you for being here.
Thank you, Madam Chair, Mr. Buchanan, members of the subcommittee, for the opportunity to testify before you today. My name is Bob Kerr, and I'm the head of government relations at NAEA. Enrolled agents are the only tax practitioners for whom IRS directly attests to their competence and ethical behavior. NAE represents the interests of some 46,000 enrolled agents across the country. Our members usually work with those on the smaller end of the small business scale and more typically see gross incomes in the tens of thousands rather than the tens of millions. I will discuss two issues today: reasonable compensation and record keeping, and provide several approaches that would help S-Corps and to some extent all small businesses operate more easily. One of the advantages of an S-Corp is that shareholder employees can receive both wages and profit distributions, both of which are subject to the shareholder's personal income tax rate, but only the wages are subject to payroll taxes. Not surprisingly, the tax advantage for distributions over wages leads to challenges for the corporation, namely in determining what constitutes the reasonable compensation required by IRS. In the absence of clear guidance, people disagree on what constitutes reasonable, and many EAs find themselves enmeshed in or refereeing, shall we call, spirited conversations with their S-Corp clients as a result. Meanwhile, other small S-Corps are completely unaware of the reasonable compensation requirements, which can lead to very unpleasant surprises during an audit. With respect to reasonable comp, EAs and others are in a quandary when asked what is reasonable or when suggesting to a client that his comp is in fact not reasonable. I know there are those who believe that treating S-Corp and partnership income similarly would solve that problem. I'm not at all certain that we would buy into that solution, however. At the same time, in the absence of a significant fix right now, we suggest that practitioners and S-Corps could be helped by practical IRS guidance in determining what is reasonable compensation. This could take many forms, but we suggest an audit technique guide may be appropriate. As to my second point, I can't imagine I'm the first person to come before this committee stating that record keeping is the bane of a small businessman's or small businesswoman's existence. Record keeping is burdensome, and the code requires small businesses to keep a myriad of records. For instance, Section 274D requires stringent documentation for deductions both for cell phone use and for business use of an automobile. Section 280A requires in-home offices to be used for business activities solely and for deductions to be made as a proportion of the entire home. Further, there is no de minimis amount for expensing rather than depreciating business assets. At the end of the day, small business owners are not tax experts, though the complexity of our tax code really does dictate that small businesses retain tax experts to advise them of their obligations and to help them take advantage of tax code provisions such as Section 179 expensing or the business provisions of the recently passed stimulus bill. NAEA has advocated for years for simplification and wherever possible in the tax code. To that end, we applaud and encourage the conversations recently underway with respect to a safe harbor for in-home offices, and particularly note Chairwoman Velasquez's bill, H.R. 46. Further, Chairman Rangel in H.R. 5719 recently proposed removing cell phones from the Section 274D listed property, which is a move that would dramatically lower record-keeping requirements. We enthusiastically support such provisions. Now, if I may be so bold, S-Corps and small businesses would be greatly assisted if Congress measured complexity and gave it weight when considering various tax law changes. Further, both IRS and tax professionals are well placed to provide information to S-Corps and to small businesses as they organize. EAs far too often find these businesses in tax trouble not because of malice aforethought, but because of sheer ignorance or because of bad advice from unqualified preparers. Congress could act to improve competence in the tax preparation industry by enacting H.R. 5716, the Taxpayer Bill of Rights, introduced by Representative Becerra. We believe that greater competency leads to better advice and better compliance. For its part, in recent years, IRS has made decided efforts to educate small businesses and should be supported and encouraged as it moves forward and as it continues to balance its compliance obligations with its assistance obligations. This concludes my testimony. I'll be happy to answer questions.